Hey everybody, it's Tim Moore from T Moore Financial here with another market update video for you. It is the beginning of May 2021, so we're going to take a look at April's monthly closing candles across the major indexes and kind of take a look and see where we've been and maybe talk about some possibilities where we could be going in the months and certainly weeks ahead in the market. So again, I need to give a disclaimer. This is not investment advice and should not be construed as such. If you need personal investment decisions and suggestions for your portfolios, I want to encourage you to contact a registered investment advisor. If you'd like to reach out to me, I'd be happy to talk to you about your needs and take a look at what an investment advisory relationship might look like for you. But this is just talking about the market, not promising anything, just seeing what we can learn together and hope to be able to teach you something along the way. So I'm going to switch my view here, and we're going to look at the monthly candles. And just a reminder, we talked about this the first time, but if you're new here, what's a candle? Candlestick patterns are a way to plot out price action and the most important aspects of a stock, a bond, any sort of securities movements, which is going to be over any given time period, the opening price, the closing price, and then the high and the low of that time period. So if we're looking at a monthly candle, let's just look at and start where we usually start, which is SPY, which is the S&P 500 index ETF. Okay, so let's take a look at this candle right here. This is a green candle, which means we started at this level, ended at this level, and during the month we got as low as this level down here and as high as this level up here. So it's important to understand how to read these candlestick patterns and charts when you're trying to plot out where we're going and where we've been. So if we take a look at, since we're here, we'll look at the S&P 500. This is the month of April and another strong bullish month. We had a nice big green candle, green body of the candle, which means we closed quite a bit higher than we opened, and just a little bitty wick on the top here. Not a whole lot off the all-time highs, which was 420.72, which corresponds to somewhere around 4,200 in the S&P 500. Again, this is a ETF, which is a index fund that tracks the S&P 500. So for every dollar movement of the SPY, you're going to have roughly $10 in the overall S&P 500, but they are the same thing. So there's really not a whole lot to show here in SPY because you just continue to see this really strong and higher uptrend, moving pretty quick, I would say. If we look at the month, we were up about 5.3% for the month, which is a big move. I mean, that would be a healthy yearly gain, let alone monthly gain. So we continue to make strides there. If we can, I'm going to switch over my view to yearly, and I can see where we're at year to date. Boy, we're up 11.6%, which is just a fantastic move. So I would not be that shocked to see not a lot of movement from here to the end of the year. I mean, we will see continued movements and volatility in the overall market, but if we ended at this level, I think that would be a great way to end the year on. Nobody probably is talking about that because we don't want to be here only a third of the way through the year and maybe you've already hit our highs. But anything's possible. I'm just saying, look at the chart history. You know, this kind of falls in line with this whole bull market here. You know, we've had some 20-30% years. We've had some 11%, 13%, and then very few dips along the way. So yeah, unless something changes, we see indications in these chart patterns that we're about to head for a reversal. You know, no sense in getting bearish yet, especially with things so far above their moving averages. I'm going to take a look at QQQ because I think this is something that continues to tell more of the story for me, and I think it's more important to the markets, honestly. I talked about QQQ quite a bit because we had, in the previous month, we had a pretty clear Doji candle, which is, if you remember, is an indecision candle. So we really want to see what that followed up with to get a direction on where we might be headed. The reason I say QQQ, which is the Nasdaq index, is probably the most important to me. It's because these are where your high-flying growth names and tech stocks are going to be at. So all of the major, the highest market cap stocks, not all of them, but a good chunk of them are in the Nasdaq because they are tech stocks these days. That's the way our markets works and the way it is. So really you need these names to move for the overall market to really move to great lengths. So I talked about how we wanted to see on a Doji candle for the previous month, you wanted to see a break of the highs or a break of the lows to confirm whether this is a continuation pattern going up or a potential reversal pattern where it would start to break back down. So I said, let's watch these two levels here, kind of this 297 on the low side and then the high side 324. Well, if you look at the monthly candle for April, it's a green candle, started here right near the highs, and we broke through it. And in fact, we made a new all-time high, not too much higher than our previous high from February, but we did break that. And look, we settled back down and we closed right at previous resistance. So kind of interesting here. We peaked above it and then kind of retreated just a little bit, and we're still kind of in this contention with this former high. So I wouldn't say we are completely out of the woods yet on QQQ or the Nasdaq, but it definitely is looking good. You'd rather see this than obviously a big red candle and break below would probably tell me we're headed back to this 20-month moving average. What's really interesting to look at, so I'm going to get real technical here for a second. I apologize if this is not your deal or your style, but you can see I have this trend line here. Let me switch over to, let's do daily candles. Okay, so we have a pretty clear established trend line. Actually, I'm sorry, let me go down to hourly. I think that's where I created it. So we go to hourly candles. This is the previous all-time high from February 16th. So we have a clear peak and then a fall off, and we broke through all these moving averages. We kind of bounced back up here, broke through, didn't bounce a whole lot, and we just dropped and dropped and dropped. So we got all the way down to that 297 level, and then that was clearly our support, and then we rallied from there, kind of came up, hit down, back up again, hit down. So now we've created this downtrend line, which is an important line to break and level to break, and you can see it broke it right on the last day of the previous month. So we kind of broke out of this range, and we wanted to see if this would confirm, if it would come back and retest or break down or continue up. And you can see obviously throughout April it continued up with a pretty strong move. Something really cool we can do is use something called a Fibonacci retracement tool. And that probably sounds like a foreign language, and that's because it is. I don't know who Fibonacci is, but I'm really thankful for his tools. So we can either do a retracement or an extension. Let's do an extension because we want to see not a retrace, but what a potential move up could look like once it breaks this level. So when I do this, I'm going to come down to the previous low and then the previous high, and then I'm going to connect them to the breakout. So we had kind of a fake breakout right here. We never closed above that level, so we're going to ignore that. We had a touch here, and then we had a clear break right here. So here's where we're going to put our levels. Right, try to get as close as I can, right at that breakout. Now look what happens. This gives me different Fibonacci levels. We have a 23.6% extension, a 38.2% extension, a 50%, a 61.8%, and then I don't know if I can zoom out enough, but there's extensions above this that go all the way up to 100 and then beyond. So this kind of gives new levels of support and resistance once we break this level. Okay, so look what happens here. We race all the way back up to this 23.6, and we open there just a couple days, right on that level. It's where we held as support just 2 or 3 days after we broke out in the first place. And then, well, look what we did here. For a couple days, we danced around in between 23.6 and 38.2, hit it right to the penny, and then fell off, found the hourly 20 moving average as support, and then kind of danced around here. And then what happens? On the 8th, we gap over it, go up a little bit, and then the next day we come back and now find support off this 38.2, which also corresponds with the 20 hourly moving average. And then that starts a big rally, almost touching this 50% retracement. And then we kind of back down a little bit. All this is healthy. This is normal stuff. We're retracing. We're kind of consolidating here. And then again, we have a big gap up on the 13th, and now we're above the 50%. Okay, so now we hit this, and we're kind of in no man's land here. We're at this 341. which is going to be a new all-time high, and clearly there's some overhead resistance because we hit that and then fell off pretty hard and even broke the 20 for a little bit. But the next day we got back up, and again, look at where we're contending with. We're hitting this wall right here at the 50%, or excuse me, we're at the 61.8% Fibonacci retracement. But the point is, man, I'm going to zoom out here. Look at these levels. To the T, consolidating, break over, retest to the T, hit resistance right to that level, break over, come up, hit this new resistance, break down, look, held this 50% of support, big breakdown, and now in the middle of these two, held this as support, broke back over, kind of stalled out here a little bit, right again at those levels. Look at all these lines. These are key supports and resistances. Back here, break down, back up. Look, we still kind of have a little double top thing going on right here. We'll have to see what happens there. Comes back, consolidates, consolidates. Look at this, holding support right here at this 50. So this 50 has been tested multiple times now over the course of the second half of April. So that's a pretty good support line on QQQ, and we closed right there. So it's nice because these moving averages can kind of catch up a little bit. So we'll see where we open up tomorrow, the first day of May, the first trading day of May. If we hold this level and then kind of continue our retracement, see if we can test this 61.8% line, and that would kind of be our next test and keyed, and see if we can go. I think I can go here and see what's next. Yep. So it's 78.6 after that. So you can even see it clear here on the daily. Boom. Here's our point of contention. This is our battleground right now. This is holding us pretty clear support. This is resistance. So our key level will be if we can break over this 342.61 on QQQ this week or the next week, and then see if we can head up to the 78.6% extension, which is 349.58. I kind of think this might be where we're headed, just because this isn't giving super bearish signs yet. But you can kind of see the daily candle from last Friday isn't the strongest. We've got a doji, but we got kind of the small body of it on the lower end of this. So, you know, we may not be done kind of on this lower trend line testing that. And we'll see what happens there. We're also holding the daily 20 as support. So I know that was kind of a lot of technical mumbo jumbo, but I just wanted to show you the power of these support lines and resistance lines as they apply to price action and how we can move forward. Last one we'll look at is IWM, which is the Russell 2000. This is small caps. That's the daily view. I'll look at monthly view, and we have something kind of interesting here. We have really two doji candles, and it's an inside doji candle. What's an inside doji candle? That means this candle is inside the range of the previous months. So this is price compression. We didn't break out past this doji like we did on QQQ, or didn't continue the strong uptrend of the S&P 500. We're kind of compressing our price, saying we're going to be within this parameter, this range, which is a pretty big range from the month of March. So what would you look at for the month of May if you're looking at small caps? I'd be looking at to see if you get another inside candle, because you can even get an inside candle from this, which is further price compression, which means you're probably going to have a pretty clear top trend line and a bottom trend line to give you a triangle, which triangles are also tradable patterns where you can look at the break either above or below to see where the price might be moving from there. So IWM is also giving some indecision. QQQ was a positive. Sorry, now we got these Fibonacci levels. They're going to kind of cloud this, but QQQ's candle really broke out from this doji, so that was giving it a bullish sign. However, we're now contending at previous all-time highs, so that's going to be the battleground there. And then again, S&P 500 just looks green. So until we see some pretty massive selling, which has not been the case for a while, it looks pretty good for now. Last thing I'm going to show you real quick is the VIX. VIX is a volatility index, and it kind of measures the overall fear of the market. Usually when you get a VIX above, I would say, look, you can kind of hear long-term support for the VIX is going to be, around 10, 11, 12. So anytime you get above 20, you're dealing with a fearful market. One thing I want to note, I'm in daily view right now. Let me switch to weekly, a little bit cleaner. Okay, so let me go back to March of 2020. We all know what happened then. That was when the COVID really became a reality and we knew we were going to shut down, you can see this huge spike in the VIX. That's when the market was selling off. So the VIX is inverse to the S&P 500. So when the S&P is dumping, the VIX is rocketing up. When the S&P is ripping, the VIX is breaking down. So you can see a quick shoot up for several weeks and then break right back down. But look, we kind of gapped up here, and we had not filled this gap from the initial fear until real recently. We finally broke underneath this level in the month of March and have kind of been more approaching normal. 18 is a little elevated still because I think there's still some uncertainty with the Fed, with inflation, some other data points, but if we can kind of get back into the 11, 12 range, I think that's a much more calmer, stable market. So hope that was helpful for you. If not, oh well. Hopefully you didn't waste too much time watching this video, but maybe it just brings questions to mind or makes you think, I wish I knew a little bit more about this, or maybe I wish I just was working with somebody that really did know something about it and could help me understand why I'm invested the way I'm invested and what's going to be potentially happening in the future that I should be prepared for. If you'd like to reach out to me, I'd love to hear from you. My email is tim@tmorefinancial.com, or you can call me. My number's on the website. Hope you subscribe to the channel, our YouTube channel, to be notified when there's new content. And I love hearing from you, so send me a message, leave me a comment if you have a question. And if not, I'll see you in the next video.